Bet you didn't know that your Roth IRA can be used to buy a house. Bet you didn't realize, even if you're not making income, you can still have a Roth IRA. Bet you didn't realize that you can put money in a Roth IRA and then invest in crypto. Let's talk today about a few things you didn't know about your Roth IRA. We're going to go over 7 specific things and potentially ways to make money on an IRA that you didn't know about. Hey there, my name's Kenneth French. I'm with vastsolutionsgroup.com, where we do tax, finance, and artificial intelligence to lower entrepreneurs' tax liability. A lot of what we do also involves the blockchain and other strategies to help small business owners or entrepreneurs. Let's get right to it. Roth IRAs, they're a great investment vehicle. People don't realize they're out there sometimes. People don't realize what you can do. People don't realize that they're tax-free. Well, you're going to understand 7 little things you didn't know about Roth IRAs just a little while ago. The contributions are not tax-deductible, so when you put money in, it's not as though you're getting a tax favor, but your capital gains, meaning every single year the portfolio goes up, let's just say, tax-free. You don't have to pay taxes. Let's say you pull the money out when it's called withdrawals. When you withdraw the money, also tax-free as long as you abide by the IRS rules, and they're not that tough rules, as a matter of fact. So let's go over the probably the most interesting tidbits that people didn't know. We're also going to have a little bit of a bonus at the end. So yeah, you can use your Roth IRA to buy a house. You can take up to $10,000 of earnings from your Roth IRA to put towards your home. The only catch is that you have to be a first-time home buyer, but that's nice, right? Let's say you need a little bit of money to make a down payment. You can do that. A lot of people don't realize that. So that's number one. You got to be aware of how much it might cost you in the long run to take the money out of your Roth IRA. At whatever, let's say 10.5%. That $10,000 is worth it's worth $155,000 in 25 years. So sometimes it might be best to find other sources of money for your home. Who knows, family or other loans, et cetera, et cetera. But anyway, it's worth noting. Number 2, not everyone can get a Roth IRA. Well, there are income limits, and some people simply do not qualify. The numbers can change from year to year, but it's worth at least thinking about, depending on your circumstance. You have to talk to your own advisor to see if it makes sense. Everything you should do should be customized when we're talking about money. So don't go by a podcast, don't go by YouTube. Call us, email us, whatever the case is. Go to our website, vastsolutionsgroup.com. We can help you on the specifics. Call us at 888-808-8278 or contact your service provider as it relates to tax or finance, whatever the case is. Anyway, number 3, dividends are free from taxes. Dividends on investments in your Roth IRA, they're not taxed. We had someone just a couple weeks ago who actually thought they were taxed. Nope, not taxed. Actually, it was a CPA. That might not seem like it's a big deal, but if you own a lot of dividend-paying stocks in your portfolio, the amount can really add up over the decades. So number 4, another thing that you're probably not aware. You can contribute, let's say this year, and claim it was contributed last year, right? Typically, depending on the circumstances. Anytime before tax day or when you, let's say, extend, you can make a contribution and claim it for the last year, okay? That means if you're a little short of funds, let's say last year, December 31st, you couldn't make your contributions, you still have time to make your contribution, again, plus extensions. So if you hurry up and get your taxes done early, you can take a refund and apply it to your Roth IRA and claim it as a contribution for the prior year. By the way, you might potentially have to refile your taxes, though. Anyway, ask your tax provider about specifics. Or check us out on the web for some of our resources involving that specific strategy. And again, vastsolutionsgroup.com. Now, it can outlast you. Number 5, if you or your spouse, let's say, hopefully not, but you happen to die soon, the 2 accounts can be combined without penalty. Now, whoever said the government never did anything nice for you, well, they didn't know about Roth IRAs, right? So it can potentially outlast you. That's a nice element to a Roth IRA. Also, it's inheritable. Your Roth IRA can be passed to your heirs without penalty. With some planning, it's a great way to pass money along after your death. Roth IRAs are very probate friendly, but again, in that case, I would say see your attorney for details. And